Hello, this is Coach Mike with winningstockcoach.com. Going to get started with this week's market overview video for the week ahead, the week beginning May 18th, 2015. It's actually the last full trading week of May. The markets will be open all week this coming week, but the following Monday is Memorial Day, so the markets will be closed that day. Anyway, looking out here at the SPX, the S&P 500 chart, here on the weekly chart. In reality, it looks like not much happened. You had a little bit of a early downfall in the week, but was able to finish the week positive from the open. Looking at the daily chart, though, you do have a little bit. It's not a textbook version of a specific chart pattern, but it has to do with this low area from April 30th through the move from Thursday, where Friday was just kind of a blah flat day. What that particular pattern is an inverted head and shoulders on the daily chart. So with that, if we got continuation to the upside, we would look at a bit of a momentum trade up to this 21.35.33 here. And after the momentum trade kind of concluded, a swing up to that 21.78.38 that we've been talking about. Remember, this target up here that I've been talking about for a couple months now was basically that if we were going to get there, it was going to take 2 to 3 months, and we started talking about it actually right over in here, and that it would probably happen into the last week of May. So here I am, a couple months later, saying it was going to be a pain in the butt to get there, but we got about 50 more points to go, and we will see it there. Now over to the DJI, that's the Dow Jones Industrial Average. A little bit more pronounced breakout here on our weekly chart. You see the break above that target point and the swing highs we had. And we're going to be looking at target 18,871. If we were to happen to get above that, the higher end of what I could see happening is about 19,286. But I think we will start that swing. But I do want to tell you, I'm still not convinced it's just going to be a straight pop there. I think it's more likely to still take 2 to 3 weeks to just kind of get there. And I'm not even so sure that when it gets there, it's going to look like it's going to stay there. But a little more profound. Right now, you're going to want to use the support level 18,140. That'll be your support level to use for your stop outs. But aside from that, if that 18,140 holds, we should see continuation into the upside. Now we take a look at the RUT, the Russell 2000 Small Cap Index. I talked last week that if the markets continued up, the Russell might have the most room to go. Well, it is kind of looking like that. And with the same small continuation, if we were to get the continuation that broke the prior highs, we should see a pretty good move on the Russell for the next 2 to 3 weeks on, a nice hearty swing for it. We want to use the support level of 1228.11 for the Russell 2000. And then finally over to the NDX, the NASDAQ 100. I actually like how this held up with that bit of a morning star right off of that weekly swing high point. Some moves at the end of the week in Apple and Facebook and some other NASDAQ stocks, the big technology stocks, kind of made me believe that we got some potential upside coming. So we're going to look for that 40.